All right. My pick for the year. I don't want to say my pick for the year, okay? But the stock that I am adding the biggest position to for the year is something that, even though I thought has been undervalued for years, I've never owned, and that's Google. Why did I buy it today? Couple of reasons. Number one, I still believe it's undervalued. I believe it's undervalued. All right, their ad revenue is insane. Their competition, one of their competitions in Facebook's dead. I did an entire YouTube video on why Facebook's fucked. Apple has already stopped tracking. Google's doing it too, which is they're ganging up to destroy Facebook. I think they're undervalued. I think the amount of data Google has and collects, the amount of acquisitions they've had, the amount of revenue they bring in, even on, not even just on YouTube, but everything else. I think they're going to Trojan horse the shit out of Uber right now by integrating their maps right now. I think they're just going to get all their data, see where the routes are the most and where the most pickups and everything like that is. And then they're just going to develop their own fucking service using all that data and just push them out. But I think they're heavily undervalued. Number two, their earnings a couple weeks ago, really good. Announced a split. They hit $3,000 a share. But more importantly, the stock split. Now, this stock split is not happening until July. There's plenty of time for this to go down or go up. I don't know where it's going. But right now, it's at a 30% discount from where it was at its earnings 2 weeks ago. It might go down more. I'm sorry, 20%. Now, Stocky, that's all good and great, but that doesn't tell me why you're going to buy. Okay. One thing, and we were right, last year we thought that NVIDIA would be the next to split, and it turned out. But let me tell you something about why these stock splits are so important. Number one, Google is a blue chip, okay? It's one of the fat mags, okay? People want to own Google. Not just because it's a strong company, and it's growing, and it's taking over the world, and it's going to run AI and all the chips in our brains, but they want it because it's a big thing to own, right? Like, I own Amazon stock, I own this. Let me tell you something. Stock splits, and we explained this before, Tesla, Apple, and NVIDIA. Stock splits do one thing and one thing more importantly. That's they bring in retail buyers. And in this market, in the last 2 years, there's more retail buyers and traders than there ever has been in the history of the stock market. Sure, a lot of them lost a lot of money, but a lot of them still have a lot of money. And people that are making money and people that are doing well, every day more and more people are getting into the stock market. And there's a lot of people that still haven't had the opportunity to lose all their money yet, but they will. So, what happens? Let's say you buy one share of Google at $2,500 today. And it goes up to $3,000, right? Everybody's going to hopefully or potentially jump into Google before the split. We saw it happen with Tesla, we saw it happen with Apple. The last week, everything just moved up. Let's say it doesn't go up. Let's say it stays at $2,500. Now, at 20-to-1 split, that's $125 per share. So now you have one share here. Now you have 20 shares at $125. Well, guess what? People who want to own Google, people who never thought about it, people who see it at 125, whatever, they'll be like, oh shit, I'm going to buy this. It's 125 for a share for Google? Fuck yeah, I'm going to get it. We saw it happen with Tesla. We saw it happen with Apple. We saw it happen with NVIDIA. Retail traders love to buy it. The thing is, though, is that you want to be the person in before that, okay? So, even if it doesn't go up from here, you're still talking about this. What happened with some of these other shots? Maybe, at 125, a whole bunch of people buy it, even if it goes up to 200, which isn't that much, obviously, if the market doesn't crash. They're making a decent return on their one share. But you have 20 of those. We saw Tesla, Apple, NVIDIA just crush it after they just split because now retail traders buy in. The other thing is, though, is that if this market pullback stops or we get that drive, right, to 3,000 again before the split in July, and that's why I only bought 3 shares today, and I'll buy more in March after we get announcement on the rates and see what happens with Russia, but this is my first entry. If it gets back to 3,000, you make 20% before the split, and now you have 20 shares at 200, okay? And even if this rides to 250, that's basically a 40% return from where you're sitting at right now today. I'm sorry, that's 20 at 150. I'm a fucking idiot. Sorry. There you go. Sorry. My math didn't check out there for a second. But you got to consider market cap. Absolutely. But you're not considering market cap because you're an investor. You're not trading this. It's going to dilute, sure. Well, not really dilute. It's just splitting. But it's going to add more shares, into the market for market cap. But two things. Number one, people who haven't previously owned don't give a shit about that or don't know it. They get to own Google at a valuation that's actually, they're able to do. Retail traders are dumb. I mean, I'm a retail trader. I'm dumb as shit. Okay, they're going to be like, oh my God, it's at a discount. I'm going to buy here. And if ad revenue and consolidation continues, they keep killing fucking Facebook. They keep consolidating, keep buying up companies. They own data. Data's the new gold. Okay? I'm just talking about me. I'm not telling you. I'm just saying that for me, the fact that it's down 20% from where it was in earnings after their earnings announcement 2 weeks ago, more downside potential if the market keeps sliding. But, and I'll add more in March, depending, because there's two things that'll happen next month. One, we get more announcements on rates, and number two, we get more idea of what Russia, Ukraine is doing. If this thing's dropped, I'm going to buy one share every $250 that this drops. So if this goes down to 2,250, I'm going to buy one more share. And if it goes down to 2,000, I'll probably buy two shares. The split isn't until July, so there's no reason for it to get close to a high, price right now. Everybody's like, I'll just buy later. I don't know what's going on right now. There's too much shit going on. Treasuries are going nuts. Bond market's crazy. There's war. There's supply chain. Google has to face problems with inflation, but they're not a company that has to deal with supply chains as much. And for me, I think that based on the fact that this was just $3,000, which I still think is undervalued, splitting down at $2,500, I have to make my first entry. Now, could this keep pushing down? Absolutely. This market is in dire straits in a lot of ways right now. But a company like Google is a strong company that is going to only continue to consolidate and get bigger. I mean, they made like $64 billion just on YouTube ad revenue alone. And watch time is continuing. YouTube gaming is continuing to go up. And that's just YouTube. That's just one small section of Google. It's not down 20% from earnings. Well, earnings at top 3,000, and it's at 2,500 now. 2,600. All right, sorry, 2,500 though is what I was looking at this morning. So sorry, not 20%. What? 15% down. Either way, imagine somebody came to you and said, "Hey, you can get Google at 15% discount." You know what I mean? Without even knowing that there's a stock split coming. It hit 3,000 for like 2 seconds. LOL. This motherfucker right here. Holy shit, it hit 3,000 in the middle of a fucking market sell-off for like 2 seconds. Imagine if the market was bullish, you shithead. That's a good fucking sign. It only hit 3,000 for a couple seconds in the middle of a market sell-off. That's you.